Hey traders, welcome to the November market breakdown. We're going to just be covering everything post the election, see how things are going to be playing out moving forward, or at least how we think they're going to be playing out, and what's expected from these markets following all the election turmoil, basically. So starting with the DXY, it's going to go full screen and just show you exactly where we're at. As we've been following this for months and months now, we were still looking for a continuation of dollar weakness. Our next level of interest is going to be this 90 handle, but more than likely it looks like we're going to head into the upper 80 region with the DXY before we see it turn to the upside. We're seeing the same thing in the euro, where the euro is looking like it wants to continue higher. As you can see, we're trading the same thing. DXY and the euro, pretty much the same pair, inverted, and we're looking for continuation of this ABC correction. More than likely, we're going to go and test 124 for the next level and up into the 130s before we see a turn to the downside. So looking for that kind of price action moving forward. If we zoom into lower time frames, what I think is going to be happening over the next few weeks or months is a little bit of dollar weakness up towards this 120 region, and then more than likely one more retest of these lows. I don't know what's going to cause this little sell-off in the euro, little surge in the dollar, potentially something to do with Donald Trump and contesting the elections, maybe some civil unrest in the US post-election. And following that, we will see a continuation to the upside. That's what the chart is saying, at least. We may even see this run a little bit higher, maybe get up to kind of 121 before we see this turn. But it does look like this turn wants to play out as a C wave. So we're looking at this as an ABC corrective structure. We're seeing the same thing in the pound, where the pound is showing a similar hand. We had a strong pullback for our A wave, and we went into a little bit of impulse up, A, B, C, D, E, expanding triangle B wave. We'll see a continuation to the upside and then one more pullback. So it's kind of in line with the euro and what's happening there. If you zoom in, you'll see much more clearly how we're looking at this as an A, B, C, D, E expanding triangle, with the first impulse up, A, B, C, D, E, second impulse up, and then we'll see a turnaround and a pullback towards the C wave. Seems like we'll go and test the highs. Obviously, it'll be ideal if we go and break the top. It always gives us a good indication for continuation. And then we'll see a turn to the downside, and then from there, continuation to the upside for the pound dollar. We zoom out, we'll just see the structure that we're playing for the pound dollar. It still remains the same. We're still looking at this as the corrective structure. And this is the higher degree ABC correction. So we should see this continue up towards kind of 140 before we see a turn to the downside. Aussie dollar, US dollar is not as clear cut. As you can see, what we have is just a very strong impulse off the lows, trading that structure. When we zoom in, it's not as clear as to what we're looking at really. As you can see, zoomed in even more, we saw a break of these lows. So we can't look at this as our B wave. We need to see all of that as one structure. And then also going back, can we still look at this as an expanding flat? And then we're going to see that precious metal strength and Aussie dollar strength moving forward. As you can see, we've had a very strong impulse off the lows without much corrective structure, which you would expect from a B wave. So I'm tending towards looking at it like this, kind of similar to Bitcoin, where we saw a very strong pullback in Bitcoin, which we weren't sure if that was a wave or a C wave. Then we just saw a strong impulse off the lows. And we're starting to see that impulse off the lows in the Aussie dollar. So for now, I'm looking at it as that, a complete correction and an impulse to the upside. But if we start to see corrective price action in this region, then we're going to have to start to look at all of this as the A wave. So all of that would be corrective structure. And then we'd have to start to look at all of that as an A wave all of this would be a B wave and then a C wave, which would be here for a very long time, which would need to be given the length of this impulse. So yeah, let's see how it plays out. For now, like I said, still looking at this to impulse and continue higher, but there's a possibility that we see this structure as well. So just need to be patient and see how things play out. New Zealand dollar, US dollar, also a little bit of an anomaly. What we're looking at, because what we see is an impulse, and our first crossover comes in this region. So we're starting to look at that as our corrective structure. But there's no real compliance within that corrective structure, which means, again, I'm more entitled or more keen to look at this as your corrective structure. And this is just the start of the impulse up. Impulse, we went into a little bit of an expanding triangle. That's just your first corrective structure below a degree. And then we're heading impulse up from here, which is exactly what we're getting. We're getting a nice strong impulse off those lows. So I'm starting to look at Aussie dollar, New Zealand dollar as being very bullish at the moment against the US dollar. And it's kind of in line with what EM is showing as well. Emerging currencies, emerging market currencies are also very bullish. So I'm tending to look at this corrective structure as a complete structure and then move off to the races to the upside, which means what we're looking at is a move to follow that is really should see some upside legs, something very similar to that, up towards kind of 0.76 as your full target. US dollar CAD, kind of showing the same thing, very strong impulse down, nice long drawn out ABC running flat. We had a bit of a strong push higher, which was unexpected from here, but from there we started to see a strong push lower. So if we zoom in, what I'm going to look at that as is potentially something along these lines, a bit of an expanding. It's not very clean, not my best structure, but at the moment that's all I really have for these lines, because if impulse up, impulse down, it's very difficult to discover what that actually is until we see some clarification, price action moving forward. So for now, I'm okay to look at it like that, given the kind of turmoil around election. There's also a possibility that we're looking at it as just a kind of wave failure of this ABC, and now we're seeing an impulse to the downside. So all of that is just part of a higher degree ABC corrective structure. And now we are seeing an impulse to the downside along the same lines as Aussie dollar and New Zealand dollar. So all looking pretty dollar bearish at the moment. US dollar Swiss, I think very similar to US dollar Euro, where we're seeing this little bit of a B wave structure, expanding triangle in the middle. And this looks much more close to correct or completion before we see this move higher in the dollar. And then from there, we should see continuation weakness moving forward. So a little bit of a mixed match picture at the moment, given that the New Zealand dollar and Aussie dollar are looking so bullish, US dollar CAD looking so bullish, or the CAD looking bullish against the US dollar. Then the US dollar Swiss is looking so bearish, and US dollar yen also looking pretty bearish for the short term. Over the next few over the month of November, we should see some dollar strength against the yen and the Swiss, and potentially the euro, as we said, and the pound, as we said. So it's kind of the major FX really looking bearish against the dollar for the month of November, and yet the Aussie dollar, New Zealand dollar, and US dollar CAD are looking like they want to hit higher. So have to just keep a close look on that. Potentially, like I said, maybe we have this analysis wrong. And what we're actually looking at here is a corrective structure very similar to the other pairs, where you have this impulse up, this is your B wave down, and now we're going to see the C wave to the upside before we see this move down. And then we'd have to negate this as a corrective structure, which I'm not so keen on given how long the impulse is. It means we'd have to be here for quite a long time in this corrective pattern. So yeah, kind of a mixed bag. And like I said, only price action is going to be able to clarify that for us. When we go into something like silver, we're seeing very similar structures in terms of a push higher, but then more weakness before we see a continuation to the upside. So we're all looking at that as an A wave. Now we're in the complex B wave, which is kind of dragging out, which is always good for a B wave to give clarification. And now we're going to see the C wave to the downside before continuation. Gold, very similar scenario as well. We've had nice long drawn out A wave, nice choppy B wave to the upside. Doesn't necessarily mean we're going to get to the highs, but we should see this top out at some point and then see a C wave pullback before we see continuation. So precious metals also showing kind of initial dollar weakness. Potentially this turns very soon and we just get a regular flat and then we get our C wave, so dollar strength over that coming month, and then kind of rest of the year dollar strength, and then heading into the new year dollar weakness continuation. Copper still looking good for upside. Not going to get into too much detail there. Platinum very similar to gold and silver, looking for continuation to the upside and then a pullback before we see a continuation or of a higher degree. So we want to see this move still. All of this is just corrective price action of this impulse, which means we should see this impulse to the upside and still go see kind of 1.3 on platinum. Euro pound, still looking at this as an expanding triangle, which means we're going to see a push. What I think is we're going to see a push up towards the highs. So a little bit of euro strength in comparison to the pound, and then a nice pullback, a bit more choppy, but decent pullback towards kind of 0.88 towards 0.86, depending where we top out, and then continuation from there with the euro. So in terms of trades, you would be looking for potentially this trade to the upside. It's difficult to catch given the corrective price action and how choppy it is, but definitely looking for this short towards the end of the year if you're trading the longer term. If you're looking for the long, there's a potentiality for some entry in this region. If this starts to play out as a nice corrective structure, then we can see a bit of choppiness in this and then continuation to the upside from there, which would give you this trade, which could be a really nice trade given the upside target is up towards this 0.94 to 0.95 region. So that could be a very nice trade moving forward. Euro Oz, absolute mess in terms of a structure, but the structure is very corrective for continuation to the downside. So what we're looking at is strong impulse down, long drawn out corrective structure, and then another impulse to the downside, which is, this is on the daily, so it's a very nice trade to the downside. If you can get it, you're getting from kind of where we are now, 163, all the way down to 1.4. And this kind of matches why the euro US dollar is looking to be sideways for now, but the Aussie and the New Zealand are ready to head into their strength already, which is interesting. Euro New Zealand, kind of similar picture, although I'm expecting a little bit more of a turn before we see impulse to the downside. I still need to see this C wave, but this could definitely impulse to the downside quite strongly from here, given we are in the C of B wave. So we could see a nice push down towards kind of 1.7, maybe 1.69, and only then see a push higher and then continuation to the downside, but still looking really good for euro weakness against the New Zealand dollar in the long run. Euro Cad, kind of similar situation, really messy structure, but we should see a little bit more downside and then nice push up from there. Euro Swiss, very similar scenario, a little push down and then a push higher in the Euro Swiss. Euro Yen, I think we already bottomed out, or depends how we look at it. Are we looking at this as the structure, or are we looking at this as the structure? I'm tending towards this as the structure, which means we should see some choppy corrective price action up to the highs, and then one more pullback and then an impulse to the upside, which kind of matches the other euro major pairs. So let's just see how we play out from here. It does mean you can start to look for some long entries on the lower time frames. There was one or there is one playing out as we speak. You see what we have is a little bit of a corrective structure down here and a nice little impulse off the lows. So if you want to trade this, you can have an entry order at these highs, stop loss below the lows, and then you're holding this kind of for a longer term, trading it all the way up to 1.27. What I like about this trade is that it does give you exposure to the pair if we are going to see just an impulse from here, and this was your corrective structure. So it gives you exposure to both longs. One of them is going to be an impulsive long, and one of them is just going to be choppy and drawn out, but it should still just crawl higher from here. So I do like that as a trade to the upside. Pound Oz starting to look like an expanding triangle that still has the D and E waves to play out, which means we should see quite a strong impulse to the downside to go break these lows at 175 and then see one push higher and then continuation to the downside. So definitely looking for short entries here. We go to the lower time frames. You can see potentially having a little bit of a entry in this region, maybe entry order below the lows is not so bad, although where you're going to put your stop loss is very unclear at the moment. But that being said, all the other price action is showing a fairly impulsive move to the downside towards this D wave down here. You can just move this over. So we should see this continue to the downside quite strongly, definitely to break these lows. And then just one more push higher to give you your E wave and then continuation. So you could play this patiently and just wait for this E wave trade and look to get short in this region once the E wave plays out, because to follow that should be a really nice impulse. Or impulse down A, B, C, D, E, very similar to the Euro Oz trade. Actually prefer this to the Euro Oz trade, given the structure is much cleaner. And if it does play out, that E wave trade is going to look really really attractive heading into towards the end of the month. Pound New Zealand, pretty similar scenario. We should see this just push lower and then give us another push higher, and all of that's going to play out as an A, B, C, D corrective structure. A, all of this is going to be your B and our C wave before we continue to the downside. So you'll see where on the Pound Oz, this is an E wave. On the Pound New Zealand, it's a C wave, so it should just be a little bit bigger. And then you'll see a strong impulse to the downside. Pound CAD, really messy at the moment. I'm trying to see what it is, but for now, I'm looking at it as a triangle. It's the only thing that makes sense at the moment. A, B, C, D, E, and then we should just see continuation to the downside from here. So as you can see, we are bearish the pound against the Aussie, the New Zealand, and the CAD. So those Aussie, New Zealand, and CAD pairs, basically those natural resource pairs, are really looking strong against all the majors. Pound Swiss. Actually, I think the pound looks like it wants to perform quite well against the Swiss and the yen. We zoom out to the structure that we're trading. Still looking at this as an impulse up A wave. All of this is an expanding triangle B wave. And now we're in the C wave to the upside. So I'm still keen to look for longs here. In terms of entry, potentially getting an entry at the moment, because we're looking at this as a nice impulse to the upside. Just a very long, messy, drawn out corrective structure where I would look at this as its own higher degree structure. And then this is just a little bit of a lower degree expanding triangle, which we saw in the other pair. And then we get a nice impulse to the upside. So you want to be looking for your long entries in the pound Swiss and the pound yen. Pound yen may just give us one more leg lower. So we're looking at this as the internal structure. Or it may be done as well. If we look at this as your first move down, and that's an ABC, and then maybe this is enough to do the second move down. In terms of the Fibonacci numbers, it definitely looks like it's enough, which means this could be the end of the structure, and we're now impulsing to the upside. Potentially A, B, C, D, E, could maybe look at that as a little bit of a triangle. but it is possible that we're looking at this as a triangle A, B, C, D, E, and now we're impulsing to the upside. That makes the most sense, actually, in my view. So in short, above the highs is nice and safe. In short, below the stop loss below these lows, or even below these lows at the E wave, also pretty good. And as you can see, zoomed out, the structure we're trading is kind of indicating a nice move, and should be quite an impulsive move up towards kind of 154, 155 in that region. That's the full target. So it could be a really nice trade. Aussie dollar yen, basically two different scenarios, both as clear as the other. So it's very hard to decide what we're looking at here, and only price action will determine it. So zoomed out, you'll see there's either two ways of looking at it. We have an impulse down, this is your B wave, or another A wave up, and now we're in the B wave. So I think this is an A, and now we're in a complex structure. And we either are going to see another test of these lows and then an impulse higher, which doesn't make sense from the macro framework. And I'm more inclined to look at this as your B wave, which means that's your A, B, C of your lower degree. Your higher degree structure is A, we just saw the end of B, and now we're seeing a C wave to the upside, which means just flat out continuation to the upside from here. That makes the most sense to me if the Aussie dollar is looking so strong against the other pairs. But what that means is on the lower time frames, we need to see some upside momentum, which means we can look at this as the corrective structure and an increase, a nice impulse to the upside from here. That makes a lot of sense to me as well, kind of along the lines of Bitcoin, where we saw this impulse up. We were worried that this was an A wave, but it actually turns out to be a C wave, and we just see continuation to the upside, which means you're looking for long entries now on the lower time frames. And there's potentially one on the offering here if this plays out as a nice running flat. So if you get a nice little dip, this is a definite buy and probably one of the best trades of the year if it does play out in this fashion. Obviously, there's a little bit of uncertainty around it, but because all the other pairs are looking very strong against the year, or all the other Aussie pairs are looking really strong, then you can see this play out really nicely moving forward. So we're keeping a close eye on this one as one of the best trades of the month. New Zealand dollar yen, pretty much the same story. In fact, a bit more clarity given the structure looks more corrective. So kind of looking at that as your corrective structure, and now impulse to the upside. I'm actually inclined to look at that as your corrective structure, and this on the lower time frames turns out to be a bit more of an expanding triangle as your first correction. Something along these lines. Now we're impulsing to the upside. So both looking really good for upside. Aussie dollar, New Zealand, zoomed out, you can see exactly what we're looking at. Impulse up. All of this is a choppy B wave down, and now you want to see this just continue to the upside. On the lower time frames, it's not as clear because we're not so certain as to what we're looking at. And from this viewpoint, I'm more inclined to look at this, just zoom out to the daily, as all of that is one impulse, and now we're looking at this as your first wave lower. So now we're looking at this as your corrective structure. So we should see this just chop all the way up back to the highs as a ABCD correction, just early days of that. So not much tradable. It's not the most attractive trade, but it is available to you for a nice long if you can find entry on the lower time frames, which potentially you are going to get from this region, but it's not my most attractive trade, so we'll see how it plays out. Just have to be patient. Aussie Dollar Cad, not much to look at. All I can really see here is this And as you can see, Aussie dollar, the CAD, New Zealand, and Aussie are all looking really strong, which means they should be kind of moving sideways against each other, which makes sense. And as you can see, the Aussie is looking the most strong against these, at least for now. But what you can expect is, looks a lot like this wants to become an expanding triangle as well. So A, B, C, let's push up to the highs, pull back for an E wave, and then continuation to the upside. So definitely the Aussie is looking like the strongest of the pairs you want to be trading. So we're looking to get long in the Aussie pairs. Aussie dollar Swiss, very similar to the Aussie yen, in some ways even cleaner. Looks like the whole thing is complete, and now we're looking for upside. Zoomed out or zoomed all the way in, looking for potential entries. Hard to say, but potentially what we're looking at now is a nice clean running flat, and we should see just a little bit more downside from this pair. I would really like to see these lows broken with this move lower. This makes a lot of sense as an ABC running flat, and if you do see that very much in the same lines as the Aussie yen, you want to get along the Aussie dollar Swiss. That's a really nice trade. If we zoom out, you can see the structure that we're trading points a lot to an upside that is very attractive. As you can see, we're looking for an upside target, full target of around about 0.78, which is a very big move. So looking really good. Swiss yen, zoomed out, you can see I remain in my bearish viewpoint for the Swiss yen. I still think we're going to go test these lows at 101, which is a very big move. The lower time frames, however, really confusing at the moment. There's obviously still potential to go test these highs once again, but as we speak, it kind of looks like this is developing into a corrective structure of some kind for continuation to the downside. So definitely a trade to look out for, maybe towards the end of the month, where this completes as a corrective structure. You see a C wave later on, somewhere down the line, and then you want to get short to the downside because you're trading that all the way down from 115 basically down to 101, which is a huge trade and should be quite a strong move. So very interested to see how this plays out, and this could be your first corrective move to the downside, which is definitely room for short trade. Oil, going to go straight into UK oil. Again, one of two scenarios. Are we looking at this as one big corrective structure, as we've been trading and analyzing for so long now, maybe an expanding flat? I'm kind of inclined to see it as that, because what we've seen from these lows is a very strong impulse. So if you start to see on these lower time frames this play out as a little nice small correction in this region, something along these lines, your choppy move back up to the highs and a nice impulse to the downside, then you definitely want to trade this to the long side, because that's going to be a very strong push up towards probably $55 to $60 oil, which is exactly what we've been saying for kind of, I don't know, the last 2 or 3 months. We've been looking for this to play out exactly as it has. We were thinking this wasn't going to go. We were looking at this as the corrective structure, but we just saw a little bit of a big move to the downside, which became a bit more of an expanding flat, but we still look for this impulse to the upside. Obviously, there's a chance that all of this is an A wave, which means we're just going to be here for a little while before we see this move to the upside. So I'm still looking for bullish oil. It just depends. Are we in correction now, or have we just completed a correction? Only time will tell, really. But in any case, you definitely want to look for this long on the lower time frames over this week. SPX, as we said, we were looking for a push down into this 32400 region, and then a big strong push up towards 4,000. I believe 4,000 is going to be a very key level here for the S&P. So very bullish at the moment, still expecting continuation to the upside. And as you can see from these lows, just a strong push to the upside. The confusion, you can either look at it like this, get rid of all those arrows. You can either look at it like this, where this is all just one big corrective structure, which makes sense too, or you can just look at that as your impulse, and this is just a zigzag kind of election confusion in this region, and that's your first structure, your first lower degree corrective structure, and now we're impulsing to the upside. Either way, you want to be long S&P. I'm long S&P call options, as I've been saying for the last few months, and I think 4,000 is going to be the level to watch on the S&P, and potentially higher, to be honest, given where the euro dollar is and where we expect the euro dollar to go. NASDAQ, I think we're going to be seeing this develop into a bit of a triangle unless we start to see some complex corrective price action. Starting to see something along these lines for now. So we should be sideways. Like I said, I'm not very bullish tech at the moment. Tech is just purely overbought and needs to be in a sideways correction for a while, probably the rest of the year. The Dow, very, very bullish. The Dow, as you can see, nice long drawn out corrective structure. And now we just saw the first move of the impulse, and we want to see continuation of this structure to the upside from there. So you can see upside target for the Dow is around about 36,000. So lots of room to run. Very much the same story with the US 2000 or the Russell, where we're going to see continuation to the upside. Depending how you look at this, there's potential to look at this as a triangle, actually, a running triangle, and we are now impulsing from there to the upside. But conservatively speaking, I want to look at that as your impulse, as your correction. This is your first impulse up. This is your first corrective structure, a little zigzag, and now we continuation impulse to the upside. So look for the Russell to go break 2,000 as well. DAX, we thought what we were seeing here as a running flat continuation to the upside just turned into an expanding flat. Nothing changes. We are still bullish the DAX, and we still see equities to surge from here. Same with the euro, really. We have a complex corrective structure. Perhaps something along the lines of an expanding triangle, but again, upside still remains, still expecting upside in this. So global equity is looking really strong at the moment. Probably got to do with the devaluation of fiat currencies, and that's why Bitcoin's performing so well. UK 100, the FTSE, are really bullish the FTSE. I just want to give you a full rundown from the weekly all the way down. From the weekly, as you can see, we have a really clean ABC corrective structure, where you can see that all the way from kind of the 08 election or the 08 global financial crisis, we saw a pullback and then a long chop higher as your B wave and then a big pullback. So these higher degree structures, really nice to trade. Then all the way in, you see we have a nice impulse off the lows, and we just go into basically a long drawn out flag. There is a structure in here. I'm not going to get into the details, but you have this long drawn out flag structure, and you're starting to see a nice impulse off those lows. So you should just see this continue, the very least, to go break the highs at 760 and probably beyond that, given the higher degree structure. Again, more than likely got to do with stimulus and devaluation of fiat currencies. And as you can see, in comparison to the DAX and the euro, the pound, the UK equities hasn't performed very well. So you can expect this to really start to catch up moving forward. And this is one of our top trades of probably the next few months as well, heading in towards kind of Q2 of next year. You want to be long UK equities. Same actually for Aussie equities. As you can see, the Aussie currency is performing really well. And we're also seeing Aussie equities looking to continue to the upside. If we zoom all the way out, you'll see something very similar in terms of a nice big corrective structure. And you just should see continuation to the upside from that structure. Actually, zoomed out even more. It is a bigger corrective structure. It's actually much cleaner than the UK one because we have a very clean B wave. So yeah, looking really good for more upside in Aussie equities. So Aussie equities is probably one of the top trades, given that you got the currency strength as well, in line with the let's call it the relative currency strength in line with equity strength. So some great trades available to you within Aussie equities. Nikkei also looking to just burst higher. Potential what we're going to see here is a pullback. So all of this can play out as a running structure because there is no real decisive pattern within there at the moment. So I would start to look at this as a bit of a push higher. And then inside here is a little bit of a corrective structure, which means this move now is just this wave higher, which means one more push lower to match that one, and then we're off to the races. So if you do see a nice pullback in Japanese equities, they're another trade you could be looking at. Again, very long equities basically across the globe, all looking really good. EM continues to look really good. As you can see, we just came out of a nice corrective structure on the lower time frames here. We're just impulsing higher from there. Nifty, same story. Although we could see another pullback in Nifty, kind of along the lines of that. If you do see this, then that is a definite trade. Shanghai Composite breaking out of a triangle, a nice little flag pattern, and also just pointing higher. So all equities looking really good. South African equities, the South African top 40, also looking really good. US 10-year, we should see a pullback in the US 10-year. That's what I'm expecting, although we could just see a chop to the upside, kind of in no man's land at the moment. But it seems like the most likely thing that we get up to around about 1% and then see a pullback in the US 10-year. I'm going to run through EM currencies quickly. Start with US dollar ZAR, also looking really strong. I'm seeing 14.55, potentially 13.60 on the US dollar ZAR. US dollar Brazil looking like it really wants to pull back strongly towards kind of 4.6, 4.7, somewhere there. 4.8. US dollar Mexican looks continuation to strengthen. Might even go see these lows on US dollar Mexican peso, kind of 18.50 in that region. Ruble looking like it's ready to pull back quite strongly down towards these lows at 68. And US dollar Singapore dollar looks continuation to the downside. So EM currencies continue to look strong. Turkey, not so much, although as you can see, we have a nice daily candle and some really good strength out of the Turkish. If we're starting to look at this as a structure, perhaps we go and see kind of 7.5, although given the turmoil in Turkey, it's not something I'm too keen on. And finally, Bitcoin. Zoomed out to the high degree structure, as you can see, I still expect a deeper pullback towards kind of 7,000. Don't take this too literally. I'm just saying we need to see a wave low down, something similar to that. Are we going to see it from here? I'm not so sold. I think we're going to go test the highs first at like 19 to 20,000 before we see this pullback. And then we should see a pullback down towards this long-term trend line at around about 7.5, 8,000, somewhere there, before we see continuation to the upside. So short-term bullish, medium-term bearish, long-term very bullish. Ethereum, similar scenario where we are seeing a nice drop higher. We should see this continue to the upside. We might see a little bit of a pullback here, then continuation to the upside, and then a deeper pullback before continuation to the upside from there. Something along those lines. Not taking it too literal. This structure isn't as nice and clean as I would like it to be. So kind of just wary of this structure that we're trading here. Just need to be cautious of it. But I would like to buy the big dip for Ethereum moving forward. XRP, I think we're going to see a little bit more of a push in XRP up towards kind of 40 to 50 cents and then continuation to the downside. So you want to sell your XRP when it gets up to around about 40 or 50 cents in my view. And finally, Bitcoin, gold. which we spoke about and we've been speaking about for many months. We wanted to see this break to the upside, which is exactly what we got. And this kind of matches what we're looking at on the higher time frames, where continuation to the upside, outperforming gold, then a big sell-off in Bitcoin, where the speculative nature of Bitcoin versus gold shows its hand on the Bitcoin gold chart. But then Bitcoin kind of starts to catch its feet, catch its ground, and then we see a nice strong push higher in Bitcoin versus gold. So I'm really bullish Bitcoin in the long run. If you want to hold through these dips, that's fine. It's probably the safest bet. But when you see these dips, you really want to start to accumulate in these regions. And just finally, Ethereum against Bitcoin. What I'm looking at on the lower time frames is short outperformance for now, probably over the rest of the week. Bit of a choppy move back up to kind of 0.032, then another push lower, and then kind of an alts rally towards the end of it, moving forward potentially. Obviously, this is potential to just continue to the downside, but I do think we're going to see a little bit of an alt season following Bitcoin kind of stalling out at those highs. And XRP Bitcoin, I think, should perform quite well actually over the next month, probably towards the rest of the year, as this ABC corrective structure plays out really nicely. So I know XRP is hated among the crypto crowd, but price-wise, structure-wise, actually looking really good. And a double bottom here could actually play out really nicely as we're starting to see some MACD divergence on the lower time frames. So cool, guys, that's it. That's it for the month. As you can see, basically the dollar against the majors like the euro and the pound wants to kind of weaken at first and then pull back, but then strengthen or weaken again towards the end of the year and into the new year. Pound showing the same thing. Aussie and New Zealand dollar and the CAD are looking really good for continuation to the upside. That's why I'm kind of trading this as this rather than our other analysis. So I think we just saw the end of a correction, ABC correction. Now we're impulsing to the upside. New Zealand, kind of same thing. As you can see, New Zealand dollar performing really well and US dollar CAD performing really well. So we should see a continuation of that. Otherwise, oil I think is going to perform well. I think global equities are going to perform really well. I think Bitcoin is going to continue to perform very well. EM currencies are going to do really well. And within the crypto, I think crypto is going to perform really well against gold. And I think precious metals are going to be moving sideways for the rest of the year. Yeah, in that range, really, in this range, kind of back up to the highs at 29, and then another pull back down towards 21 in silver, and very similar scenario in gold. So sideways precious metals, which kind of matches sideways-ish moves in the euro, pound, but Aussie dollar, New Zealand dollar should perform really well along with EM currencies and oil. You can probably see copper rallying really well, continuation to the upside. You can probably look at copper as an expanding triangle actually, which means continuation to the upside, which matches kind of China doing really well. So yeah, interesting charts, interesting price action moving forward. And yeah, looks like dollar bearish, basically dollar bearish for the next 6 to 18 months. It's cool, guys. Have a great month. Join us in the academy for regular videos, regular updates, and to trade ideas. Really, some really good value in the course that we put together, and our current students are really seeing some good value out of it. So take a look at senecalytics.com and you'll find the Trading Academy in there, and you can join us in the trading room. Cool, guys. Have a great month. Chat soon.